It is a dark and gloomy report, Laurence. It's almost like Game of Thrones. Winter is coming and all that. Is it a defeat of capitalism, or is this a normal slowdown that you look for?
So you're right. Growth has peaked, and we're entering a slower growth era. It's the difficult challenges of going for soft landing, and it's particularly tough now that we have a lot of risk around, first of which being trade.
Do we live in a mercantilist age? Is President Trump, within zero-sum international economics, brought upon us some neo-mercantilist age?
So we are making two important calls in this report. One is on cooperation for trade, and we're looking at tariffs and, much more importantly, non-tariff measure. And I think the message we send here is, guys, sit around the negotiating table and start talking all together seriously about all the impediment to trade. And then the second message, which we can discuss later, is about the necessity for fiscal budgetary cooperation if something, one of or several of those risks were to materialize.
Laurence, good morning from London. Do you worry about too much debt in the world, that countries are accumulating too much debt, and could that lead to the next financial crisis?
So we have pointed out the risk of debt in some countries, sometimes in the financial sector, sometimes in government. But the reason why I was talking about fiscal capacity is if something was fiscal coordination, if the downturn was more severe in the couple of coming years, then we've got little room for maneuver on the monetary side. But we have very low rates. And we also know that coordinated fiscal action is much more powerful than individual fiscal action. So what we're saying here is, again, guys, sit around the table and prepare for the next downturn. And like the central banks in 2009, when they cut rates together, then if we have a downturn, then governments should sit down and actually stimulate their activity with a little fiscal effort together. Effect would be much larger.
But Laurence, you see it with Italy. If you spend fiscally, will the markets allow it?
So the big problem in Italy is growth. And we've been saying it for years. It needs to level up productivity, to improve qualification and skills and employment, especially of the small people, to raise the quality of infrastructure, to focus on public investment. That is our main concern at this stage. And what we'd like to see with the discussion on the budget is that there's a slight shift in composition, that poverty-targeted measures are actually better targeted at the poorest, that we put more emphasis on public investment, and that we put more emphasis on reforms which will lift trend growth.
Laurence, you have within your report today a spectacular chart on average wages, on median wages, and the inequality. This is a primal scream in America, certainly, about where is the wage growth. Do you have any optimism that we will see the wage growth, or is it a global Gilded Age?
So I'm sorry, I have to confess that I have a lot of difficulties understanding you, so correct me or stop me if I got it wrong.
Sure.
But we do have in the US that labor shortages and the unemployment rate being really low has not translated yet into as high wage growth as we would have hoped to see. And partly, I think it's because of skills and qualification. And you can see that in some pockets, some people who have left the employment market have not gone back yet. Partly, it's also the ongoing discussion about the superstar firms, which are super productive and which do not fully redistribute the productivity gains into wages. And on this, we're actually digging deeper in some analysis to see whether it's a competition issue, whether the digital has changed how you look at market power, but also at monopoly power.
Very importantly, one final question. If we look at the caution within the OECD report, the idea of a difficult view ahead, can central bankers come to the rescue?
So to me, central banker, again, stop me if I get it wrong, but what we acknowledge is first the fantastic job that they've done during the crisis. Second, how well they are actually navigating these new territories, unlifting unconventional monetary policy that's never been done before. And so far, so good. We should be clapping away. And we are quite happy with what we are seeing, a forthcoming gradual normalization in the US with a little overshoot of inflation. We think that's perfectly appropriate. And the prudent, persistent approach of the ECB is also, in our view, perfectly appropriate at this time. More gradual is probably what the Eurozone needs the most. And let me take this opportunity to add, we would really want to see the fiscal authorities lift, take away a bit of the burden that they've put on the central bank so far.